We have Cameron Brandt, Director of Research at EPFR Global, now joining in to take us through the flows picture. Cameron, always a pleasure. Thanks very much. You know, the last time you were on the program, you were telling us how India-dedicated funds continue to pull in a lot of money. So in a way, India kind of attracting money on its own, not because of global emerging market funds. Has that trend continued? Has it picked up? Has it slowed down? What's the latest?
It has slowed down. It's still happening, still consistently decent flows into dedicated India equity funds. But the diversified global and gem funds are not seeing as much money. In fact, they've seen outflows in recent weeks. And that obviously has an offsetting effect in terms of foreign portfolio capital flows into India.
Okay, Cameron, that's interesting. So you're saying that there's still money coming in India-dedicated funds, but there are outflows in overall diversified emerging market funds. Is this a trend that you'd expect to continue? Because perhaps investors are getting a little more nuanced about which emerging market they want to keep their money in?
I'm a little reluctant to make too strong a determination. We're definitely in something of sort of a summer lull, a summer holding pattern until we get another round of data and get closer to the next ECB and Fed policy meetings in September. So for the most part, flows into the funds we track have been fairly flat, middling to flat, with a few very specific exceptions.
Hi, Cameron. There have been a lot of these, PE exits as well, some of them, and that's why the flows picture in India is a little bit muddled. But you tell us, what is your reading of the situation? The India dedicated flows, what were they? And in comparison to what you've seen over the last few months, which is a higher number, has that come in? Is that tapering down a little bit?
Yes, it certainly is. I mean, there was a period there where we were fairly routinely seeing 2, 3, 4, as high as 600 million a week coming into those funds. And that's dropped down sort of certainly under 100 million. So a significant drop-off, still positive, but nothing like the levels we were seeing in July and June.
So that's a drop that you're talking about even in India dedicated funds. So basically there's a drop both in EM funds as well as India dedicated funds, you're saying?
Yes. The diversified funds, the flows are actually negative at the moment.
Got it.
India's are still positive, but at a much lower level than we'd been seeing.
Okay, got that. Okay, any sense on, then where the money is moving? Is it because bond yields are higher, it's just better to hold U.S. Treasuries? I mean, what is getting the money then? Which asset class?
There's three big pots. You just named one. I think people do want to sort of get exposure to sovereign debt at offering 4 or 5% while it's still available. We're starting to see a lot of cash go into U.S. liquidity funds again, which is not good news for those regional banks here that have been getting hit with downgrades. And flows into China equity funds continue to be very resilient. The consensus here seems to be that the more bad news you get, the greater the chance that China will sort of really dive in and step up the stimulus, and that you'll finally get a bounce that you can ride.
Okay, got that, Cameron. So the trade seems to be to shore up on China ahead of that much important stimulus announcement that everyone's been waiting for. Prashant?
No, I think that does it. Cameron, great to have you with us here. Appreciate you joining in here on the program. Thank you for joining us at CNBC-TV18. So, that's the story. The India dedicated funds are seeing a tapering off, still positive as compared to global diversified emerging market funds, which have turned negative. We'll take a very quick commercial break here. Our list of top stocks to watch lined up next with our research team. Stay tuned. We're back in just a bit.